Okay, so I wanted to do a 2023 tax season update. So we're about a month away from the April 18th filing deadline for Form 1040s and for corporate tax returns. So here's some of the figures at the top that the IRS has released so far. The data they provided as of March 3rd shows that they've processed a little over 54 million tax returns so far. That is up slightly from the same time last year, but not too much. What's significant this year is the number of refunds that they have issued and released, right? The number of refunds issued so far, a little over 42 million versus 37.9 million from the same time last year. So up a little under 10%. And they haven't really commented too much on why that is. I think, in my opinion, a lot of it has to do with this year is actually a much simpler tax filing than it was prior year. So for 2021, we had things like the recovery rebate credits. So remember, this was the last stimulus check that you had to claim on your tax return if you didn't get it sent to you throughout the year. So there were a lot of holdups there because people would claim the stimulus check again, and then the IRS would hold the return or adjust it, or people would claim it rightfully so, and then the IRS think they already got it. So it was a massive mess. The other mess that they had was the advanced payments of the child tax credit, right? So remember, for 2021, we had payments starting in the summer, and so you got an advance payment of your CTC amount, and then at the end of the year you had to reconcile that with what you were actually owed, right? And so there were a lot of issues where people weren't matching those payments up correctly, and again, it's just another mess. This year we don't have that because there were no advance payments of the CTC. And then another one we saw a lot of problems with was the earned income tax credit. So you were able to use a different year to claim the earned income tax credit, so a different year for your earnings. So you can use 2019 earnings to try to claim the EATC for 2021. And again, it just created more problems for most taxpayers. So a little bit on the filing deadlines. So the Form 1040 filing deadline for this year, the original one is April 18th, 2023. And that's because April 15th falls on a weekend, right? So it moves to the next business day that's not a holiday. Now, extensions are available automatically. So you file a 4868 if you want to file that. I highly recommend doing so. But what's unique, again, this year is some special rules for taxpayers in federally declared disaster areas, right? So if you're in states like California, Alabama, and Georgia, this really applies to you. So early on in the year, the IRS extended a lot of these deadlines. Particularly, it was targeted at California, moving the deadlines automatically to May 15th, right? So California has obviously had a lot of issues with flooding and forest fires, and so they said, okay, move the deadline from April 18 to May. And so you have a little more time to file. Well, now they've expanded the relief to include a lot of counties in Alabama and Georgia, and they have flat out just moved it from May 15th to October. So basically the extended deadline for most individual returns is just being moved automatically to mid-October. Now, what is important, and I highly recommend this, is if you need more time to file, I would still recommend filing an extension, right? Because you want the system to be updated to show that an extension was filed and recorded. If you don't file it and then you file the return, even though it's not late under these special rules, the IRS, if they're not convinced that you were, in a certain county and qualified for relief, then maybe they'll still send you a late filing penalty notice, which is really frustrating. So, if you can, file that extension request and then, give yourself to the summer to really come around and get the taxes prepared and filed, and you should be in good shape, just as long as you got to get them filed before mid-October. Now, some common IRS notices that you might expect this season. You may be familiar with these from prior years, but a lot of these will delay, or they're the explanation for a delay in your refund. So the letter 2664C, this is a 60-day notice. So the IRS, if they send you an initial notice and you reply, they'll often send this letter out afterwards saying, look, we got your response, so we need more time and more information to really look at the return and figure out what's going on here. So they tell you wait another 60 days, right? Not a great response, but it's unfortunately kind of the way the system is built. The 5071C letter, identity verification, these are very, very common now. So the IRS does this as an anti-fraud measure. So if they receive your return and they got your refund, but they determine that they need to verify your identity before releasing the funds, you have to verify your identity, right? And so that's to ensure that no refund goes to somebody who's filing a fake return, right? So it protects you from identity theft. The CP12 notice, this happens when the IRS gets your return, but they think you did something wrong, so they make a change. And so that change will impact your tax refund. So if you got a direct deposit that was way different than what you expected to see based on the way you prepped your 1040, you'll get one of these notices. And so expect to see the notice in the mail, some other correspondence, review it carefully, and see what exactly it is they did change, and make sure that it was accurate, right? And if it's not accurate, then follow the instructions in the notice, reply to them, and let them know, why you disagree. And then lastly, the CP 180 notice. So this often goes out when we have a tax return that was filed that's missing a form or a schedule. And in my experience, this often happens when you paper file returns. The reason why it's not as common with electronically filed tax returns is because when you electronically file your tax return, the software often pulls all the forms and schedules you need together, right? So as you answer the Q&A, they'll often be like, hey, okay, you answered yes to this, so we need this schedule. Or you're computing this, so you need this additional schedule or form, right? So it's kind of a check to make sure that you're doing everything right. If you paper file, you're kind of just going off your own interpretation and instructions, and so there might be something that's missing there, okay? All right, and lastly, I want to look at some reasoning for why your tax returns might be lower than they were in the prior year. So I've got a chart here basically highlighting the biggest changes from 2021 to 2022. So you can certainly pause the video and review these in more detail if you'd like, but I'm going to just go through them very briefly because, again, I'm just trying to highlight some of the big changes here to look out for, because on the left-hand side, the reasoning, ask yourself, okay, this is something I had in 2021, perhaps didn't have in 2022. So the child tax credit, additional child tax credit amounts, those decreased. So for 2021, we had higher numbers, higher credits available than versus 2022, and that's because the increases expired. The charitable deductions, if you deducted some cash contributions to charity in the prior year, and you didn't itemize, you still got a deduction. But now that ability to claim the $300 per person has expired. So now you can only claim charitable deductions if you do itemize. The child independent care credit, so these amounts available for credit also reduced. The earned income tax credit, same thing, right? So earned income tax credit specifically for persons without children. What they did was they changed the ages, the ranges that you were able to qualify. So a lot of people found that they're missing out on the EITC for 2022, yet they might have gotten it for 2021. And then the recovery rebate credit. So I touched on this on the previous slide. This was that $1,400 check. If you didn't get a stimulus payment during the year, you were supposed to claim it on your return. Well, a lot of people claimed it on their return, and that increased the refund. That's not available this year. And then lastly, this is always something that comes up that's of concern, the amount of withholding, right? So one of the greatest drivers of your refund is always the amount of withholding that comes out of your paycheck. So if you have more withholding tax taken out of your paycheck, oftentimes, assuming your tax rate, your effective rate remains relatively the same, if you have more withholding, you'll get a better refund or a bigger refund. If you have less withholding, you'll have a lower refund. That's just kind of the way the system works. All right, so that covers it for this video. I hope that was helpful. If you have any questions, leave me a comment below, and have a rest of your happy tax season. Take care.